Good morning, good evening, and good afternoon, everyone. So, how are you guys doing from the past few days? So, on the Monday gap down, the Qs gap down into the um, last Tuesday low. SPY and IWM at the 150 EMA. So, I covered the SOXS near the open. I mean, I think right after the open, somewhere like 4770-ish area. Also call width up at the open near the low, or also the last Tuesday low. In SNTK, the memory name shorts, I covered them a bit late after the first close above the hourly 9 EMA, so around 555 area for SNTK. And Western Digital and Seagate also somewhere near the 9 EMA. And I covered gold on Friday and silver on Monday after they close above the 9 EMA, as I've stressed it multiple times. So if it close above the 9 EMA, then I'm out. Yeah, then on Tuesday I entered this Dow on the pullback to the EP's low area. So actually my plan is to pull back into the 9 EMA, so around 141, yeah, 141 area, and then I entered it at the 1 minute breakout. I didn't wait for the 5 minute because the 5 minute candle is too wide, and I bought the 1 minute breakout and it stops me out. And then later it found support near the previous, like the low of the EP day. I missed the 5 minute breakouts, but I waited for the, I believe the anchor VWAP reclaim, and then it pulled back to the 50 EMA 1 minute chart, and I bought the reclaim of the 9 EMA. I think definitely the better entry will be at the 138, 139 area. That will be the best, but I missed it. And I think it is very bullish as it found support in a very sharp recovery. And this is a stock that I'm closely monitoring after the earnings. I think Tuesday is a really good shakeout day. And I entered Planet Lab as well, but I got stopped out on Tuesday. Yeah, I think on this candle, but I got stopped out the late day. I also bought happiest on Tuesday on the breakout of the previous candle high. Like this is the 95 level, and I sold them all into strength yesterday because first is that I don't quite like the yesterday's action, so I decided to like sell one of them, like for my longs, like Dell and Napiers, and then I choose selling the Napiers into strength because it's coming closer to the previous high level, and that's the gap up. I got quite lucky on the gap up, and then I think there's also a pretty decent gain. Then I took it off, but it definitely still stay in my radar, and I'm looking forward to buy into the weakness if there's any pullback or if the market improves. And because this market really feels stock has a strong follow through to the upside, just very few. So I'm willing to sell more into the strength unless the market improves. And I'm still looking for the gold and silver short. I think today could be a maybe. But yeah, I don't have that much ideas to focus on today. So trying to give an update to you guys, and for the shorts, like I've always said, I'm looking forward to the pullback into the declining EMAs. So Wednesday, because Tuesday I don't quite like the close, and the defensive sector started to lose their moving averages, show some weakness. And IWM showing relative weakness on Tuesday, so I decided to take some shorts on the Wednesday. And there, I also don't see much long setups, long ideas that's viable right now. So I'll NQ at the 9 EMA. Our GTI is 21. At the bear flag after the, I think it's 70%, 74% down from the highs. And the STS is the AVWAP from the swing high, as well as this swing high too. They're really lining up together. And food is from the AVWAP at the swing high on the 5th of March. So it's the swing high of the bounce, and it stays under the 21 EMA for quite a while. And I think the length of the base is almost there. It's good enough for another down leg, or maybe an up leg, because like crypto is, I think it's going somewhere. Like it can go both way. It's still holding a 9, trying to break out from the 21 EMA. And after all the gap ups and gap downs, we're still inside this range. We haven't gone anywhere yet. Since early February, or you can say since November last year, we're still within this range. So more and more leaders are closing below the 9, the 21, and even the 50 day. Maybe it's too early to say, but the market is definitely deteriorating. This DOCN is the only new leader that I found recently. Pops up on my radar. Net is having the, how many green candle it built? 12 consecutive green candle. That's pretty amazing. Thunderlab is still inside the range. Maybe it's building an inside weak. MP also looks pretty tight. And GME actually looks quite bullish. Somehow it keeps building higher lows throughout the February and March. Interesting. Palantir is now on a pretty important level. Above the weekly 9, but below the weekly 21. And the 21 is trending down. And my view will be leaning towards the bearish side, that it builds a lower high and then gets rejected. Given the market weakness, the crypto names looks weaker than the crypto itself. Wonder if there's a sign or not. Oops, it's like just missed the entry. If you put the MicroStrategy chart ups and downs, is it no? How to set it? Like to put it, to flip it, to flip it around. Yeah, I think that's the word. To flip it around. It's actually looking pretty bullish. Looks like breaking up from this, from the range, and near the 9 and 21 EMA. Isn't it on a strong uptrend? Pull back to the 50 EMA, found support, and now is trying to break out on the 9 or 21 EMA. Now all the crypto names are near the 9. Some are under the 9, some are above the 9. But the stocks are weaker than the crypto. This is pretty interesting. The semi sector is rejecting at the 21 EMA. So now it's bouncing into the declining 21, and it found resistance. Now it's gapping down and looks like it also gets rejected at the weekly 9 EMA too. And the stop for silver is a little bit too wide. Hopefully can have a bounce into the 86. Okay, it's bouncing into the 86. That will make the entry better. And for the only long Dell, I'm going to hold it until it hit my stop. So I'm ready to give up this chunk of profits to trying to hold it as long as possible. I really think of shorting the MicroStrategy, but I know that it requires a lot of buying powers. It consumes a lot of buying power if I'm doing a short on a MSTR or even take a long on the MSTC. And I already have hood, so I decided to like save some buying power for the gold and silver short, and also the ARC to wanted to short the ARC, the RKK. Also a really decent, like a bear flag or a wedge higher bounce into the 50 and 150 EMA, and now it's falling, closing below the 9 and 21. Today it's a gap down. Yeah, I think the pullback to just now is a really good entry point. But I do have some short exposure, so I think it's okay. EP stands for episodic pivot. Either you can go search it on Google or just take a look on my interviews on Trading Line. I think a lot of traders have covered EPs. I just entered. I entered gold and silver short just now. I'm mainly using the 4-hour time frame for my decision making. So gold is finding rejection at the first, like kind of the lower high, the previous swing high, and also trying to lose the another swing high's anchor VWAP. And silver is similar. And crypto is actually looking pretty good for now. Wonder would this be a shakeout for the crypto names? Because the crypto like Bitcoin and Ethereum are looking pretty good on the lower time frame. And our daily chart is still, it is, yeah, they are riding the 9 EMA, still trying to push above the 21. The hourly time, 4-hour time frame is building high lows above all the EMAs. It's actually looking pretty good. LUNR is building a pretty good flag. Weekly chart also looks, it's looking like a couple of handle. This base is yeah, we have volume picking up, building higher lows, but the earnings is next Thursday. And it's a little bit too choppy. This UMAC is going straight up. This red wire is also looking pretty decent. So most of them are just drones. I think the drones, or this is a space equipment. So it's like satellite stuff. Yeah, always talk about Tesla. I'm sorry, not Tesla, Nvidia. If Nvidia couldn't reclaim the weakness of for today, if it confirms it is the first lower high since this earnings pop. I mean the pop before the earnings. So it's a wick of spring and then a fake out to the upside. On the weekly chart, it also is now falling under the 9 EMA already. And a lot of the mega cap names are not looking good. So Tesla is also under the EMAs, getting a rejection yesterday. Microsoft in a strong downtrend. Apple just at the 150 EMA again, and the 9, 21, and 50 EMAs are now trending down. Microsoft falling back after the bounce into the 50 EMA. Meta under all EMAs. Google to TSM at the 50. I think all the semi names are at the 50. And for oil, I think after this exhaustion, like a exhaustion gap on Monday, now it's reading higher lows, finding support at the 9 EMA. I think the next rejection is probably 105 level. And I think that there will be a high probability of oil founds a top at the second attempt on the upside after the Monday flush. I think 105, maybe even 110. 105, the previous swing high level. I think the crypto is starting to break out. Yeah, but I'm not gonna trade this one. This one still under the 50 EMA and still trending down. The 50 EMA is still trending down. It could be tricky here, like given that the crypto stocks is showing too much relative weakness. Feel free to ask any questions later in the stream, like under the stream recordings, and you can always refer to my Twitter, like the post on TTRH, like the interview on Trader Lion, etc. So sometimes the answer will be already there, and I will answer some questions, are the good ones, if I have any time. I don't write journals anymore. I only have an Excel to record my trades. Sometimes I will still write down some evaluations or takeaways or some mistakes that I've made, but it's not like in a daily basis or like a market update or the views on the markets or the trading ideas for the coming days or weeks. I did the journaling in the earlier stage, maybe 2 to 3 years ago. So back then I'm writing a journal entry every day, but I gradually just lose the habit. I didn't find a really good usage case or an angle to utilize AI in my trading. And also myself, I'm not really into AI. I'm not really good at AI. So I try to to use AI to build in daily updates of the previous strong leading sectors for the previous trading day. But I think it doesn't work that well. Sometimes they are putting stocks in the wrong sectors, in the wrong industry. Sometimes they are giving different results when I'm asking them again, and sometimes they're referring to the wrong news, the wrong data source, and I'm not good enough to like fix all the bugs and to drill it down. And for mine trading routine, I will look at all the sectors and all the stocks in my watch list every day. Like no matter whether, even if I have an AI, like a good AI or a good program or etc., like to helping me to find or list out the strong sector, I'll still flipping through my watch list, the sector watch list, etc. And I think like doing the scans and managing my watch list is actually providing me more accurate more comprehensive insights than just a summary table or just a ranking from AI. I'm really open to like using AI to elevate my trading, but I'm still trying to find an area that the AI can really deliver a strong edge, where it really improves my daily routine, my like or any part of my trading. So for my performance, I'm up around 40% year to date. I think I'm not checking it like daily. Not sure about that, but it's like around that level, I think. Leader list is I did the potent scan in the morning, like Hong Kong time, so it's after the market closed, after the after hours of the market, like when the things aren't moving. And I found that it's the best time for me to do the scans and to go through the chart and finding the trade ideas for the next day, because the market's not moving, and then I can be the most rational and not get influenced by the ticks up and or the ticks down from the market. So I think nearly all of my stocks, in no matter leading or mediocre or the lagging watch list, are from the scans. So CF is the recent one. So when I did the scans, I'm just going through it one by one. And CF, I added it yesterday. So it's like a fertilizer stocks, because rising up because of the war in Iran. And normally, like the stocks that I'm added from the watch lists, no matter it's like a potent watch list or a pre-market watch list or even the leader watch list, will be putting in the leading sector, because the scanner is scanning for the strongest stocks in the current market. And yeah, and for the leading watch list, my current approach or the rules that I'm using right now will be the stock that's above the 50 EMA. So I'm only using the 50 EMA as like for the easier interpretation. And the 50 needs to be above the 150. So two rules. The first rule is the price should be above the 50 EMA. And the second is the 50 EMA needs to be above the 150. And the lagging watch list is completely opposite. Just flipping the rules in the leading watch list around. So the stock needs to be under the 50 EMA, and the 50 EMA is under the 150 EMA. And for mediocre watch list, it's just anything in between. So I think most of the time is the stocks is about somewhere between the 50 and the 150. And most of them, they are in between the 50 and 150, and then I put it into the mediocre watch list. Actually, I changed the rules quite a lot since I built the 3 main watch lists. But I'm just trying to keep them as simple as possible, because I'm flipping through the daily chart. So I want the rules should be only based on the daily chart, and I wanted to involve as less as possible as less EMAs as possible. I don't want to like compare all EMAs to figure out which stocks that I'm which watch list that I should I put the stocks in. And also that's just my approach, because I think a pullback into the 50 EMA is still it's a really good watershed or boundary, like for that I would still do shorts if the stocks pull back into the 50 EMA on the downtrend. And on the flip side, I would look for the long side if the stocks pull back to the 50 EMA on an uptrend. So any stocks above the 50 EMA that I should be only looking for the long side. So the watch list is cooperating with my trading style, the entry style, etc. If you're using the like 21 EMA only, like for the pullbacks, you can like categorize only above the 21 EMA for the leading watch list for your convenience. So for example, GFS up, it will be downgraded to the mediocre if it closes below the 50 and above the 150. And SCCO2 is going to be downgraded pretty soon. Yes, I rarely set alerts because most of the stocks that I'm interested in, I will be putting it into the main watch list. So for example, for the ARK, RKK, like I wanted to take the short around like the gap. If it bounces back near the gap level, 7275, that will be a great spot to short. And I think I don't need the alert if I already put the stocks that I wanted to trade, that I wanted to focus on into the watch list. Like I can really see it, what's the movements and what's the recent price. But sometimes I do set the alerts though. Like for like a price target, like for example, if I'm short, like I'm shorting IONQ now, maybe I'll set a price target at maybe at this like 30s, at the low 30 area for this previous swing low level, to remind me that I should definitely sell some into the cover some into the weakness. I just occasionally do that. How do I exactly know that the stocks is breaking out on a certain day? I don't know. I think no one knows when will be the exact time, exact candle, exact 1 minute candle that the stock is really breaking out. But there's a lot of different factors that you should consider in, such as like I think the most important one is the general market. For example, yesterday or like the day before, the Qs is at the 50 EMA, under the 50 EMA, so and the EMAs are trending down on a downtrend. SPICE is weaker, IWM is even weaker. So any breakouts on yesterday would definitely have a lower win rate. Would definitely have a high chance of a fake out. So something like Rocket Lab. So it's like basing. It's going sideways for a month and a half. So we'll take the breakouts of yesterday's taken out on the Tuesday high. Like no. At first, like is from his own chart is still like the EMAs are, the 9 is still below the 50 definitely, and it's at the 50 EMA, and it shows a lot of rejections at the 50 EMA with the market weakness. And the second one is the sector, like the sector strength. So what are the other stocks in the same sectors doing? So something like ONDS yesterday is also not a good day to enter the long side. The EMA is starting to trend down. It is at the anchor VWAP from the swing high. Also, it shows this candle, and this candle is showing huge distribution. So like the third factor will be the like technically, are there any signs of distribution or accumulation? And also relative strengths, etc. Are there, is it building higher lows? And also the weekly chart. I also love looking at the weekly chart too. So I really don't like ONDS, the weekly candle of last week. Huge rejection and closes very, very weak. But all in all, I think the most important factor is definitely the market, like the general market itself. Like if the market is like is down 2%, rarely there will be any stock that is breaking out and having follow through. So some charts like MP looks really good yesterday, and now it's falling back. I made a lot of mistakes, like buying a breakout on when the general market is not doing good back in 2021 and 2022. So that's really the lesson learned, and only after you're getting stopped out a lot of the times, then you will eventually learn the lesson. How often do I update my watch list? Every day. So the market's bouncing at the 150 EMA on all indices. Really interesting spot here, whether we can find support or not. A lot of the stocks are still at the beginning of a breakdown. It's not even extended yet. No matter the large caps or the mid cap, even the small caps too. So just as if the market is gapping down into the 150 EMA, while like our NQ is having a flush to the downside, maybe on this candle or this candle right here, then I'll be having more conviction that the market could find support on the 150 EMA here. Now I'm a little bit skeptical. I will also look for more further follow through to the downside. I think there will be a high chance. Like this is only day 1 for Tesla, day 1 for TSM, day 1 for Google, day 1 for Meta, maybe day 2 for Amazon. And that was super strong. Somehow I'm winning a 50-50 pick. I sold Napiers and then kept the Dell. And that's the reversal from the crypto. So actually the crypto stocks is the leading indicator for the crypto itself. That's pretty interesting. Why EMA and not SMA? Because E is a better alphabet. E is the 5th alphabet, and S is definitely S ranks later in the alphabet tier list, right? A, B, C, D, E. I know the sequence pretty well. Yeah, that's true. S stands for shit and E stands for excellent. Exactly. Maybe give a little bit of respect to the SMA. Like stands for simple. No, simple is actually the one. Stands for stable. Why metal short? So I think some of you has listened to this already, but I'm going to repeat it again. So I think the parabolic top on the late January, like on this candle here, is the end of the metal's move. So there are a lot of like technically weekly candle, huge volume, like the largest volume ever. I don't know how many times compared to the normal volume. So it's trading at the largest volume candle. It's like twice volume than the previous week. And actually the previous week is also one of the highest volume week ever. So this weekly candle and as well as this reversal, huge reversal to the downside is I believe it will be the end of the move. And that's the foundation of this trade idea. And after parabolic top, like a really, I mean, it's a top for at least a quarter or more than a year. For example, back in 1980, like after it tops up, it falls under it dips for 50%. And in 3 months. And I think this example is illustrated pretty well. After the first flush, first reversal from a parabolic top, usually there will be a retest into the 9 EMA, and sometimes they will be stronger, such like this example back in 1980. It tries to build a higher low, tries to break out from this range, and then forms a lower high, and then it gradually loses the 9 EMA, close below the 9 EMA, and then riding the 9 EMA down. So there are lots of examples. Like, it's not exactly the same, but they are like rhyming. It rhymes. But definitely, like for gold, if I think comparing to itself will be the best ones. Even if you zoom out for a longer time frame, you can see after if you consider this is the first leg down, and then it gradually recover from this base, breaking out, and then builds another. You can say it's a couple of handle pattern or VCP. So it gets really tight here. It looks really good to the upside, and it has 2 to 3 weeks, a 15%, around 15% move, and it rejected right at the previous swing high level, previous resistance level, and then it starts a 2-year downtrend. I think Bitcoin, the move this base here is also a little bit similar. This one is not a parabolic move, but if you believe this is the top, like really a top of how much is that? 1,600% move from the lows. Then after the first leg down, then there's this second attempt, and this attempt actually takes out the previous high, trying to break out. Like, this looks a pretty decent flag, bull flag, and is trying to break out and set up another uptrend, but it fails. And riding the 9 EMA down. So another one is like this Volkswagen. Volkswagen is back in 2021, parabolic top. So there's 2 attempts on setting up for higher, but it fails. Like here, it looks like it's a really good looking bull flag, but eventually fades. Although this pullbacks, like after closing below the 9, losing the 9 EMA, it only reaches the 50 EMA, and then it has a 1 year, like 9 months base or stage 3 base before the stage 4. This one didn't give the higher lows, the second attempt to the upside. But you can also see after it really finds the top here, and then it's gonna riding the 9 down. Is it better to wait for the declining 9 and a bounce to entry? That's no right or wrong. Like that's the trade-off. If you don't wait for the close below the 9, then you will have a higher chance of getting stopped out. Like you can found support on the 9 and then bounces back. But if you wait for the pullback after close below the 9 and the 9 starts declining, sometimes you don't get the entry. But sometimes it's just going straight down. Either you miss the entry or it doesn't give you an entry. So it depends on your risk appetite, your profit cushions, your style, even the conviction of on the trade. I think the only thing that it defines whether a trade is like I don't want to put it that simply, so never mind. Yeah, there's no right or wrong. No, I rarely use the news. I don't trade the news. I don't cap the maximum sizing for each positions. But if I'm trading, like if I'm having losing streaks, not getting tractions, then I'm definitely would trade smaller. How can I make sure I don't miss the optimal buy point? You have to accept it. At least I accept it, because sometimes you miss, then you miss. And if I think like certain opportunities is really good, then you probably won't gonna miss it. Swing high or swing low for Edgar VWAP. So for example, I'm using the swing highs for the resistance. That's what I usually do. Like for resistance, I'm using the swing high. For support, then I'm using the swing low. But actually not. Like, it's about where, like, the price relative to the anchor VWAP. So for ASTS, it's staying under the anchor VWAP. So any anchor VWAP will be the resistance. Even if I'm putting it anchor VWAP here, like if I'm putting an anchor VWAP at the swing low, and the price is still under the anchor VWAP, then it's also a resistance, and it actually makes this short better, because it's under all the anchor VWAP. No matter where you anchor the anchor VWAP at, they are the resistance. None of them act as a support. So I think it's not about where you anchor it, it's about where the price, like, is the price above or below it. And I love using the swing highs more. If a stop is 0.8%, using 0.35% of the position size will be 43%. I think there's also a consideration for gap risk. If you're trading an ADR stock, such as like Futu is looking fine, but something like, if you're trading like the Tencent, the ADR holdings, like that, this kind of stocks has a higher risk of being a gap up or a gap down, then I'm not willing to risk that much on the stocks that has a has a high risk of being gap down or gap up, you can say, a gap risk in nature, by nature. So definitely, like, something like the small caps, especially the micro caps, I'll be sizing down. Like, I will be more cautious about my sizing, because they have a higher chance of gapping down. Even though, like, it's not gapping down 10% or 20%, it's not a huge gap down. 5% gap down will be like devastating. So generally, I limit the positions that I took will be around 25 to 30%. I think what I found the most impactful, I believe, will be the process of understanding yourself, like really knowing who you are. When I'm at the beginning of the journey, I used to set the stop pretty wide, like around 5 to 8%. Then I come across Christian. Christian is set, and then I set the tighter stop. Like, I try to set around 3 to 5% stop. And gradually, after I tighten my stop, I found I'm pretty used to, or feeling pretty good about using a tight stop and getting stopped out often, but I can get a larger position size into a winning position, and I don't have like that much of a hard feeling when I'm getting constantly stopped out. And after realizing it, and then I started to explore whether I can even, like, further tighten my stops. So reduce my stops to below 2%, to below 3%. And that's where, like, I think is probably 2024. I think it's 2023 to 2024, and my performance starts lifting off. Like during your learning phase, you'll come across a lot of um different style or approach from different traders. And the interesting thing is most of them are trading differently. Like the entry style is a little bit different. The stop settings are a little bit different. Even the stop picking is a little bit different. And back then, sometimes I'm just going to like copy them, but doing exactly what they wrote in the books, what they share in the podcast. But eventually, I'm just throw them all away. Maybe not all, like throw most of them away. Just I think the most important thing is finding your own style, and you really know what is your biggest edge, like the edge that is only you possess. It's okay to like copy other traders' approach at the beginning, but gradually you need to like evaluate whether this style suits you, or how can you fine tune just to tweak it a little bit to make it more suitable for you. Training for scan settings is available on the DTRH post. You can go look. You can look at them on Twitter and also the Federline interview videos. So it's been quite a long stream, and I think that's it for today. Thank you guys for coming, and we'll see you in the next one.